Yo, real quick, if you own literally any tech stock, an index fund, or your 401k has growth in the name, sit down. Because this week, two of the biggest companies on planet Earth just told Wall Street the same secret. And Wall Street did not like it. Tesla lost almost 19% of its value in 5 days. Alphabet, that's Google's parent company, got smoked for nearly 8% in a single day. And get this, both of them actually beat expectations. Good news came out, stocks still tanked. So today we're breaking down the AI spending panic, why the companies making the most money on Earth right now are somehow scaring investors more than the ones losing money. Let's get into it. First, context. 4 or 5 companies, Alphabet, Amazon, Meta, Microsoft, and now Tesla riding shotgun, are about to spend a combined $650 billion on AI in 2026 alone. That's not a typo. $650 billion. That's more than the entire GDP of countries like Norway or Israel, spent on chips, data centers, and robots in 12 months. For comparison, that's up 67% from what they spent just last year. Bro, that's not investing in the future. That's sprinting into it with your wallet on fire. What actually happened? So let's talk specifics, because the numbers here are actually wild. Alphabet dropped their earnings on Wednesday. Revenue, $96 billion, beat estimates. Cloud business grew 32% year over year. Basically everything Wall Street asked for, Google delivered. Then they said one sentence that wiped out the vibe. They're raising their yearly CapEx, that's capital expenditure, aka money spent building stuff, from a range of $180 to $190 billion, all the way up to as much as $205 billion. And they hinted 2027 is going to cost even more. Translation, we're going to keep spending and we don't know exactly when it stops. That one line sent the stock down almost 8% in a day. Not because they lost money, because investors are starting to ask, when does this actually pay off? Then Tesla drops their earnings the same day. Deliveries? Record 480,000 vehicles. Also good. But CapEx, money spent on AI, robots, self-driving, the whole Optimus robot situation, jumped 142% year over year. Free cash flow, which had been positive for 2 straight years, flipped negative. Like actually negative. Over $1 billion in the hole for the quarter. Elon's response on the earnings call? Basically, we should spend as fast as humanly possible, even if it's a little wasteful, because moving slow is worse. He compared it to Henry Ford building the Model T. Respect the confidence. Wall Street was less romantic about it. Stock dropped 14%, then kept sliding to almost 19% for the week. Why this actually matters. So here's the real question, and this is the part nobody's explaining right. Why is spending money scaring investors more than the actual competition or bad news would? Simple. Investors aren't scared of AI, they're scared of AI turning into a money pit with no exit. Think about it like this. If your friend says, I'm investing $10,000 into a business, that sounds great. If your friend says, I'm investing $10,000 into a business, and also next year it might be $15,000, and I genuinely don't know when I'll stop, that's when you start backing away slowly. That's exactly the vibe right now. These companies are spending like they're certain AI pays off eventually. Chips, data centers, energy, robots. But nobody, including the CEOs, can give you an exact date on the return. And Wall Street hates uncertainty way more than it hates bad news. Bad news you can price in. Trust me, bro, you cannot. Add to that, oil prices are spiking because of escalating conflict in the Middle East, which is dragging the whole market down at the same time. So this AI panic is landing on top of an already nervous market. Bad timing stacked on bad timing. The flip side now, is this actually a red flag or is this just growing pains? Because here's the thing people miss. Google's cloud division's profit margin jumped from 20% to over 35% in a year. That's the AI spending actually starting to convert into real money. Some fund managers are straight up calling Alphabet one of the best AI plays out there, specifically because of that trend. So this might not be a bubble popping. It might just be the market doing what it always does, punishing companies short-term for long-term bets, then rewarding them later once the receipts show up. Amazon's not even reporting yet, and it already dropped 4.6% just from being associated with the sector. That's not company-specific fear, that's sector-wide nerves. What this means for you, here's why you should actually care, even if you don't own a single share of Tesla or Google. If your 401k, Roth IRA, or index fund has any exposure to the S&P 500, and statistically it does, you own a piece of this drama whether you like it or not. The Magnificent Seven make up a massive chunk of those index funds. When they sneeze, your retirement account catches a cold. This is the exact moment where people panic sell because a headline scared them and lock in a loss instead of just waiting. Nobody on this channel is telling you what to buy. But understanding why the market is moving is the difference between reacting emotionally and actually understanding your own money. So, AI bubble or AI growing pains? Drop your take in the comments. If this broke it down better than your finance professor ever could, smash the sub button, because we're just getting started. See you in the next one.